It's time now for a Muni Moment with Taylor Riggs, our segment that focuses on the top stories in municipal bonds. Taylor.
Hey, Yvonne, yes, and of course, this week all eyes are on that 3% Treasury yield, and that's, of course, what we are focusing on. And joining me now to discuss this, RJ Gallo, Senior Portfolio Manager and Head of the Municipal Bond Group at Federated Investors. So, RJ, my question to you is, how much are the muni yields really being pressured from the 10-year Treasury hitting 3%? We have a terminal chart at GTV Go showing that 10-year muni is still stuck right at that 250 level.
Yeah, it's a good question, Taylor. I like to remind people that although munis sometimes have their own vibe and diverge somewhat in returns from broader fixed income, all year long, every major fixed income asset class is posting negative total returns. Munis as well. The BarCap, now the Bloomberg Barclays Index is down about 140 basis points. The AG of taxable bonds is down quite a bit more than that. So munis have posted negative returns, but have actually outperformed a lot of taxable fixed income on the year. We're also seeing flows get somewhat more constructive. Despite negative total returns so far, we've seen intermediate and long-term funds still getting inflows. Perhaps investors are attracted by the higher yields they now can receive.
Well, RJ, you mentioned inflows, so let's go there. High yield actually seems to be holding up. We just had 7 straight weeks of inflows into those high yield muni bond funds. Where are you constructive on high yield right now?
Well, within high yield, we've seen tobacco. I mean, it's almost bulletproof. Tobacco's outperformed for quite some time. We still think tobacco settlement revenue bonds have some incremental outperformance, not of the scale we've seen. Something to note, the high yield tobacco universe, so those TSRs that are below investment grade, the available universe has shrunk about 20% in just a year because we've seen refunding. So the technicals are supportive of tobacco. Senior care revenue bonds, CCRCs for older folks, also have the demographics as a wind at their back, and they've been posting some attractive outperformance as well in the year. We still incrementally like high yield, where income is going to give you some buffer from incremental price loss as yields edge higher from here.
Well, that's interesting that you mentioned that about the coupon sort of replacing the drop in price and gathering more of that total return. I want to talk a little bit more about tobacco because that's what you were talking about, specifically New Jersey. I know this month, a big $3 billion deal. Did you participate in that deal? And give me a little bit more about tobacco here and maybe the high coupon offsetting the drop in the price.
Well, I hear my compliance officers saying, don't answer that question. But I will tell you that the New Jersey tobacco deal, very high-profile deal, another example of taking below investment-grade tobacco bonds, refunding them out with less leverage, therefore more robust to consumption declines, and getting investment-grade ratings on them. So a lot of focus on that transaction. Another example of why the high-yield universe of tobacco has incrementally gotten smaller over time.
I'm glad that you're staying in compliance there with your officers. Thank you. That was RJ Gallo, Senior Portfolio Manager and Head of the Municipal Bond Group over there at Federated Investors.